What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Tuesday, November 23rd. As always, guys, nothing that is discussed on the channel is financial advice. I simply provide people financial education, education that I then hope they will use to understand you don't have to slave in 9 to 5s if you don't want to. You can easily hustle 24/7 in the stock market and still be able to accomplish all those financial goals, dreams, or aspirations you may have for yourself. As with anything else in life, always you're going to get out whatever you choose to put in, but it all starts ultimately with you, right? But let's go ahead and get into it. Let's put in some work. I'm excited about this play today. As you guys can see on the top left corner, this ticker is going to be DELL, otherwise known as Dell Technologies Incorporated, right? We're looking at a 1 day, 1 year chart. As you guys can see, each candle specifically on the chart is indicative of one specific trading day, right? You see the MACD and the RSI. Essentially, our MACD is currently in a selling period, trending down, and you see that our RSI is currently directly below neutral at 48.358 specifically, right? This kind of gives you a level set understanding of where we are as of today. You see that we are currently trending, bouncing off our 50 MA, currently bouncing once again, which presents to us a good entry opportunity, to be specific, right? Some of you may be wondering, well, what do you mean? Well, specifically, as you notice back here, right back on September 15th, when we bounced off the 50 MA and headed to the top side, obviously you would not want to enter a trade up here with this big of a gap from the 50 MA when we are bouncing directly off of it, right? And the price action will actually show us we've used it as support and specifically as resistance, bouncing off of it multiple times on multiple occasions, right? So whenever you see things like this, right, or you can easily recognize that trend, then that automatically should tell you whenever it comes back to touch the 50 MA, presents to you a perfect entry opportunity, right? Let's go ahead and zoom out though. As you guys do like or do often see and know, I like to get the bigger picture perspective, not just the zoomed in focus, right? So this massive dip that you see back here in the chart, this is COVID dip, right? Specifically March 16th, March 17th was when essentially everything came tumbling down in the stock market and before everything started climbing back up. Normally, March 17th, March 18th is when you start to see the push to the top side. But as we see from this massive COVID dip, which is nothing more than fear in the market. If you ever want to know what fear looks like in the market, this is fear in a market, right? But taking a look, you can clearly see that since then, since this COVID dip, we have been nothing but a straight shot heading straight up vertical and respected this trend specifically that I've drawn here on the yellow line. We have not broken, no false breaks, straight bounces off the 50 MA and just keep climbing, right? Dell is a juggernaut. It is a monster specifically. This company does specialize in computers. For those of you that do not know, they have gaming computers, work computers, tablets, printers, servers, pretty much you name it and anything in the tech space, and they are heavily involved in. I have a couple buddies who are software programmers and software engineers, and they swear by XPS computers and Alienware. They swear that it's the best thing since sliced bread. Me personally, I've dealt with a couple Dells here in the past through work, right? I had a Dell computer issue through my work. Again, I wasn't a big fan of it, right? But it wasn't the worst either, right? Me personally, my preference, I'm more of a Mac guy. That's what I easily assimilate to and relate to. That's my preference, right? But to each their own, right? But again, as you see, we are respecting this upward trend. We do have earnings reporting on November 23rd after market close. That is very important. Recently, outside of this, Dell has made headlines, which I'm about to talk to first. But first, I want to talk about some numbers, right? So these are the numbers that Dell Technologies has on their investor relations page, right? To kind of just symbolize to you or give you a quick glance and what kind of production Dell is doing and producing, right? So you see 94.4 billion non-GAAP revenue. You see 12.7 billion adjusted EBITDA. Amazing. Cash flow 11.4 billion from operations. R&D, right? Research and development invested 15 billion over the last 3 fiscal years. So they are investing $15 billion into their own company to produce and make better technology, right? Something most certainly you always want to see out of a tech giant, right? That they are going and putting money back into their company to get even better, right? Virtualization number 1, storage and servers. 98% of Fortune 500 companies served, 40,000 sales force, and 85% software engineers and ISG engineering staff, right? So just a couple little headlines you can take away from, specifically from Dell. They do have a couple of different press conferences coming up, right? They do have this VMware spinoff, which is what recently put them in the news. For those of you that did not know or did not hear, I pulled up this article specifically, which was published on Halloween, I believe, October 31st. Yeah, October 31st, right? So we can see that here. It says Dell spins off 64 billion VMware as it battles debt hangover, right? So specifically, essentially what this article goes on to say is, way back in the day, Dell invested $1 billion into VMware, right? And took an 81% stake in VMware, right? Well, recently they have now split. So now Dell is its own independent entity and VMware is also the same, right? Specifically for that, there was a one-time dividend payment that was made out. Specifically, where is it? Dell was weighed down by debt after borrowing about $70 billion to finance its deal making. As part of the spinoff, VMware is paying a special dividend to shareholders of about $12 billion, helping Dell lighten the remaining debt load that stood at $32 billion at end of July 2021. Right, so they are no longer affiliated or together, and they no longer own that 81% stake. They have sold it off. But again, if you ask me, when they invested less than $1 billion to earn $12 billion, that to me is a pretty good return, right? I don't think anyone would ever complain about getting paid out $11 billion on a $1 billion investment. That's just me personally. But again, call me crazy, but I think they made out pretty well, right? Once again, earnings are not up yet. It will be reported officially as of November 23rd after close, and you will find that here. I will leave this website pinned in the bottom information of my video for those of you who want to come and dig around. Again, they do offer some of their products. You can definitely take a look at some of the things that Dell does offer. As you see, laptops, desktops, tablets, gaming, Alienware, XPS, keyboard, mice, monitors. I'm familiar with Dell monitors for my work. Specifically, those are some pretty dope monitors. Again, pretty much anything you can think of in the tech space, Dell does it. So I think you have a level set understanding of what type of company we're talking about, right? The fact that they recently had this spinoff only leaves them to be more bullish and more better positioned to focus on what they do best, right? And that is tech. So let's go into some smart money targets to see what smart money thinks, right? As always, you know we like to go to Nasdaq for that, so that you see Dell is being currently reviewed, and it has a strong buy rating by 6 analysts, right? These are the 6 analysts reviewing it. Please note, Raymond James did recently just lower the price target, I believe by $2 or $3. I'll pull that up here in the news flow in a minute to show you guys. But as you see, they have a consensus specifically of a low of 29.85, an average of 58.67, and a high of 70. Well, please take into consideration we are already sitting at 55.13 as of today, so we're essentially at that average. If we move on to Marketbeat, they do also give some price targets specifically that you can always reference. As you see, they do have a strong or a buy rating specifically, right? Not a strong buy. And then for this specific month, November 2021, you see that there is 1 strong buy, 12 buys, 3 holds, 0 sells, with a consensus price of 97.53, or otherwise giving you a 76.92% upside. A month ago, it was pretty much level set the same. The only difference was it was $107.73 price target with a 13% upside potential, right? But if we go over here, you see that the high price target that they have is 130, the average being 97 and the low being 59. In any which case, it presents nothing but potential upside to us specifically, right? Sitting at 55, right? But again, you can go through here and see it's been pretty consistently the same, right? Dell is a giant. It's a monster. It's not going to go anywhere. I see it only improving more and more, especially now that on their website, which I forgot to mention, right? If you go on their website in the investor relation, you see them talking about now cloud. That is something very, very important we need to pay attention to. Any company that starts to enter the cloud space and can start to try to compete with AWS, which is Amazon Cloud essentially, is something you need to take note of, right? Because right now, AWS is the juggernaut in that space. They are the #1 essentially company. So any company that enters it to try to compete with it is always going to be interesting to see what kind of TAM it can take away from AWS. TAM stands for total addressable market, right? But that gives you an idea of that. Specifically, you also know that I like to show you who is holding what when it comes to some of the tickers I review. So going into institutional ownership, we can see there are way more buys than sells. As you see, 2018 was probably the best with 3.6 billion, but and even through COVID, there were still more buys than sells. Currently, as of this year, 2021, quarter 2 seemed to be the best one. 2.98 billion bought, only 651 million sold. right? Even this past quarter, 1.9 billion versus 515 million sold. So again, it is still positive to the green side, something very important you always want to see. One thing I did go looking through here, there are a significant amount of institutions that are holding. As you guys see, my favorite from Jim Simon, Renaissance Technology. Again, 66% annual returns. After fees, you're looking at 39.8%. Anytime you see Renaissance Technology in a play, that should be a very, very bullish indicator to you specifically. The fact that they've also increased their position 454% should also make you even more bullish, to be honest, because that's what it does for me. Again, no one comes close to producing the returns that Renaissance Technologies and Mr. Simons can produce. So anytime you see them in the play, you need to take note of that. And you need to pay attention because, again, they're going to get the highest returns. So for any play that they're going to be in is going to produce some kind of return for them, right? So just keep that in the back of your mind. But as you see, there is a significant amount of companies or institutions that are increasing their position, a substantial amount. The only one that I was kind of disappointed of specifically that I didn't see an increase and I actually saw them lower their position was 0.72 with Mr. Cohen. I didn't expect them to lower their position 32%, to be honest. I see them really, really high. I review them really, really high, and I hold them in a high standard. So to see them kind of shorten their position on Dell, I don't necessarily quite understand the logic behind that. But again, to each their own. Specifically, Dell does have a short position as well established on them. We can go in here and see that we have currently $854 million short. And when you go looking at who specifically is holding, right, we can go into shares current. We have Shit in a Box Advisors currently holding 955,000 shares, having increased their position 84.9% recently. And you have their butt buddy friends that you always can see here as well on this list. Again, bears and shorts they are what they are, right? I was pretty interested to see some have actually lowered or exited their position, right, significantly. As you see, 56%, 33%. That's a pretty substantial drop in a position. Some are reporting NA now at this point, and then you see some of these that have 100% out. I wonder why, or what is making them exit these positions. As you know, shorts normally don't exit positions unless they feel they're going to be shorted out or pushed out or squeezed out, right? Specifically, right? Very rarely do you see shorts exit a position, especially when the short position is not that great in a company. But as always, we've gotten to the point in the videos where it is my favorite tool that I get to use now, which being unusual whales, right? As you guys know, I love this tool specifically and what it does for retail and what it stands for. So specifically going into the flow, putting in our ticker Dell up here, right? We can go in, see that there are no filters set. Again, make sure that this is set to 250 up here so that you get a full gauge and scope. We can go and pull the charts and see what the flow is looking like. As you see, we are more bearish than bullish for December 17th, as well as January 2022 at what strikes specifically, the 40, the 55, and the 60. Yeah, 55 and the 60 also stand out. Specifically, when we go back and start filtering by premium specifically, right? We'll go 15,000 just to kind of weed out some of the smaller ones. And what do you see? Now, all of a sudden, the dynamic has changed, right? So obviously now we are more bullish than bearish for December 17th. And at what strikes, specifically, you see the 55, the 57.50, and the 60 specifically stand out. Now, what originally brought my attention to this play, on side of the fact that it's reporting earnings on the 23rd, were these specific trades I'm about to break down, right? So we can go down here and set by premium so that it puts the highest premiums up at the top. So you see these initial trades right here for 11/22, 278,000, 264,000, 264,000, right? So these were all done specifically yesterday's trading day, excuse me. This is being recorded the day before. You see it at 7:32 in the morning, 8:34 or 8:36, and then 8:36, literally simultaneously, all these trades came through. Now, excuse me, one thing you need to pay attention to when you see these massive trades are for these large amounts of premium, obviously, the spikes in volume is very good. You want to see that, right? Especially when it's higher than open interest. That's definitely something unusual. However, pay attention to the multi-leg strategy, right? So anytime you see these little arrows, you can always click on them and it's going to give you a visual, right? So that you can kind of interpret what this trade means, right? And you will see this right here, right? So we see that there is a sold call for December 17, 2021 at the $65 strike. Then you see that there is a bought call for the same strike, or expiration date, excuse me, at the $60 strike, right? Well, we can go in here and kind of visualize this trade, but essentially if you understand calls, buying and selling of calls and buying and selling of puts, right? Sometimes for certain trades, you collect premium for initiating those trades, right? This being one of them, right? So selling these calls, for these 3,813 calls, essentially that they sold at the $65 strike. This institution, this company, or this person essentially collected $118,000 in premium, right? They were debited for the 3,813 calls that they bought, right, at the $60 strike. So think of it this way, right? This premium is essentially a cushion, right? They've essentially gotten a credit of 118,000 to sell these calls, right? Which if Dell does not hit $65 by December 17th, they will essentially keep and pocket this specific premium, right? That's theirs to keep. On top of that, if let's say it is bullish, it does have good earnings reporting, and it does push to the top side from 55, let's say it goes up to 61, 62, 63, they are also going to make a significant amount of money just on these bot calls, with it hopefully ending below 65, right? That is what the thesis of this specific trade is, right? And you can see that here, right? You can actually click on profit and loss, and you can see as they are wanting this specific trade to push to the top side, as you see, that is where they become profitable. If it pushes to the downside, they end up losing money, right? But again, remember in your head, right? If they're collecting premium, they're getting a credit for this. At the end of the day, what they're wanting is to keep this premium and not lose it, right? So they don't lose their shares and they don't lose the premium. So they're wanting this to not go to 65 or past 65. However, being that we're at 55, buying these calls, they do want it to push to the top side at least to 60, but not past 65, right? So this is a very bullish trade, specifically when you break it down and you kind of get that visual in your head. I love that Unusual Whales has this specific tool in Unusual Whales, because again, it helps us better understand these specific trades, right? So this is just one of these trades, and as you see, there were 3 of them, right? The next one being for 264,000. Once again, now you see they sold a call for December 17th at the 60. They bought calls at the 57.50. Once again, we can go in here, visualize the trade, and we can see specifically they were paid out what is this, $350,000 in premium for the selling of the $60 calls, and they spent $297,000 to buy the 57.50 calls, right? So essentially at the end of this, they had a net credit of $53,000. So potentially they will end up making, right? We can go down here and see. Potentially they will end up making, if let's say Dell heads up to 58.96, they will end up profiting specifically $343,000 plus the $53,000 credit that they already got for selling those $60 calls, right? But again, think of the trade. You're sitting at 55, you sold calls at 60. So you're saying you do not want it to go past 60, but you also bought the 57.50 call. So that means you want it to go from 55 up to the top side, but do not pass 60. And if this is a successful trade, at the end of it, you will pocket $53,000 in premium alone, plus on top of that, the calls that you bought will end up generating $343,000 extra dollars to your pocket, right? Very, very bullish trade. Very, very short term. Again, very unusual for Unusual Whales. That is not something that is common, right? Again, this is how you kind of interpret the flow, right? It's just having a better knowledge, understanding of specifically what some of these trades mean. Here's another one, the third one. As you see, they sold calls at the 60 once again, and then they bought calls at the 57.50. Again, we can go in this, break this down, and again, you're going to see the same thing, right? They're taking a premium cut, and they're taking a cost on buying calls, specifically hoping that it will push to the top side, but does not break where they sold those calls at, right? Very bullish trade. Specifically, this is what caught my attention the most before I decided to make the video on Dell. But again, I wanted to present this to you guys so that you can, number one, understand how to read the flow, understand how to break down the trades, kind of get a better understanding of bought calls and sold calls, right? Especially tying it around earnings and looking at the flow, kind of giving you a bigger perspective, right? But again, at the end of the day, remember, we are in this massive uptrend. So essentially, they are wanting this to stay below 60, but to push to the top side up until 60, right? So 58, 59.50, right? 58.90, anywhere in that range is what they're wanting. Not ellipsing 60, right? For one trade, and the other one was 65. So just something to think about. I think you guys get the point. As always, guys, if you have questions, please don't hesitate to leave them down in the comments below. You can always hit me up on Twitter or IG as well. Please like and subscribe to the channel, as it does help with the YouTube algorithm, and I will catch you guys in the next one.